All right, guys, this is Paul Singh, the Market Speculator, with the trade report for Monday, March 25th, 2019. Big move on Friday we're going to talk about really quick. Today starts the swing trading boot camp. If you're signed up, be ready to join us tonight. If not, you can check it out. You've probably got some emails and links, and if you have any questions, go ahead and email me. But that will be starting tonight. Today we'll be going over market analysis, sector analysis, market cycles. Tomorrow we'll get into volume patterns and some indicators. The next day we will talk about setups, and then the final day we'll put everything together. So it should be a good class here. And then we had our group mentorship session on Saturday for you guys. Looks like the video is not up here on the mentorship session page, but check that out if you weren't able to attend. The video should be up soon. We went over ETFs, the ETFs I watch, and how I look to trade them, how we look to trade them. So that's the next lesson in our little education library we have. I think that's the 14th or 15th mentorship session we've had since we started with those. So make sure to check this page out. You guys all have access to it. I put the link in every report, and the link for the boot camp, if you haven't signed up, will be in the report as well. All right, let's get to the market here. SPY, kind of a stunning reversal here. We had the Fed news. Looked like that might set up the next run. I got a little excited about it, added a couple of positions, but then the following day, there was news out of Europe. The specifics of it don't really matter to us, other than that type of news can lead to big pullbacks. So it's kind of interesting here that historically on Friday we have news that leads to big pullbacks. On Thursday we had news that tends to lead to long-term runs. So we have two conflicting things going on in terms of news. Now, we don't care about the news itself. We care about price action. Price action tells us right now, we're not predicting a big move down like this, but this is at least short-term reversal candle, which is why I went short one position and bearish another on Friday. That's what the chart is telling us here. Now, maybe we recover very quickly and then we get stopped out of our positions. That's fine. But we have to play the action we're seeing, and that was we expect to pull back and a test here now of the 200-day moving average. So as we head into the week, we go from being slightly bullish to market neutral or even slightly bearish. And the bearish part is slightly for now. If we break these levels here, then we really become bearish. So we're not making any predictions now, but we do expect some range-bound action in here, and we're set up for that. So I would say best case scenario this week is we recover the 9 and remount and maybe come back up here a little bit. That would probably be best case here. Worst case scenario, which in a sense is best case for us since we are bearish right now, but in terms of the market itself, that would be a breakdown below this support level range in here. So these are the levels, these are the ranges we're going to watch very closely heading into the week, and we'll go over the trades in a second here. The Qs got also hit very hard, but holding the 9. Now this obviously relates to the position we took, so let's talk about that. We took SQQQ, essentially shorting the Qs. Now a little different here in that SPY broke its support level, which is the 9 here, while the Qs held up. So why did I take the Qs instead of, say, SPY or IWM? The reason was it's so extended to the upside, so it has more room to fall before it hits the next support level if it breaks this one. So that's one reason. The other is essentially related to the same thing. A lot of these tech areas like software have been relative strength areas, but if the market falls or pulls back here, there's so much room for these things to pull back that I think we'll get kind of a snowball effect here. So that's the idea behind taking SQQ instead of the other two indexes here. Essentially, more room for the profit target in here. So if the entire market pulls back, the 9 will break here. It's not like SPY and IWM are going to get crushed, but magically, tech is going to hold up here. That's probably not going to happen. So I'm kind of discounting that right now. And then IWM, let's actually take a look at SQQQ here. So for those of you guys who aren't familiar with this, we've done it quite a bit, so it would only be some of you newer members here, and we talked about this on Saturday as well. These are the inverse ETFs leveraged. So it's basically, you know, the opposite of what the Qs and TQQQ are doing, and we can go long these to essentially short the market. So we went long here. You know, the idea here is it's going to run up if the market tanks. So basically a reverse of, exact reverse of that position. And if we just looked at it, if we just analyze this from forgetting about the way SPY looks, just looking at SQQQ as a stock, it would look as like a reversal pattern, big capitulation here, big volume coming in, and then this reversal candle. So that's what we're seeing there. IWM, sorry, excuse me, guys, also got hit very hard, 3.64%. If it consolidates and breaks here, I actually might add IWM to the bearish list and go short here. And that would be with TZA. And you can see that one here. Came close to taking it on Friday, but didn't want to get too leveraged on one side yet. But you know, heading into the weekend and not knowing what was going to happen. So that's IWM hit very hard, and this could lead to a big continuation down. Our concerns about IWM played out. Remember, we always watch IWM, small caps, and in a strong market, we want to see small caps doing well, and they had been showing weakness, and that's kind of played out here. So those are the indexes. Sectors, oil held up well on Friday. A little gap down, but compared to the market overall, held up pretty good. And the other area that held up well was housing. And you can see here, housing was down 1.67%. Maybe it was related to interest rate news. Who knows the reason? But it didn't get crushed like a lot of these other sectors. So on the right, if you look at a bunch of these ETFs I watch, housing was way up here. A lot of these others are metals, VIX, and that type of thing. And then we went to or gold, silver. You know, this is VIX, Russia. These are inverse ETFs, so we'll discount those. But gold, 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 VIX, silver, gold, silver. This is communications, and then housing. So the first real sector here that could get hit, it held up well with housing, and you can see all the way down here. Some of these got hit really hard. So housing held up really well. And then the rest of these guys got hit. Financials got hit big time, breaking resistance level, support levels. Retail got hit here, 2.6%. Semiconductors got smashed, 2.8%. And China here, 2.9%. And continuing hard today. XBI, biotech, small caps, 4.42%. Hit very hard. And biotech, the larger caps, 3.3%. So just about everything got crushed. But home builders, I'm going to keep an eye on home builders because they did hold up pretty well. And if you look at this list of stocks here, Toll Brothers here held up well. BZH held up well. Lowe's, which relates to home builders, construction, retail, held up well as well. So that's an area to keep an eye on here. Now let's get to trades. Stopped out of ERX Energy. We'll see how it handles the 50-day moving average. ILMN was essentially a break even, went down to 308. We got out to 314, and the entry was like 314.70. So essentially a break even trade there. And then Lulu, which reports earnings later in the week, also got stopped out on. And then the additions were SQQQ. And then I shorted one software stock. Remember, I told you software is very extended to the upside, so it has room to fall here now if the market tanks. And Twilio was down 4.52%. We entered short here as a runner short. This is essentially a stock that has run up. Now, we're not predicting a total breakdown. Just if it pulls back, we can profit from the pullback. That's the difference between, say, a runner short and a topping pattern. So this was a strong reversal candle here. Now we'll see if it breaks a 9. If it breaks a 9, it could really run down. Basically, all of the software stocks are putting in this pattern. A lot of them were down even more than 5%. So if we look at cyber, if we look at MDB, which actually held up really well, but a bunch of these software stocks that we're watching, and my mind's blanking now, but let me pull a few of these up. Coop was hit very hard. I really like this one, but when something's down almost 9%, there's no way I can short it. But most of the software stocks looked something like this. Team as well got hit very hard. This one actually crossed below its 9. So if you haven't shorted already, this is another one that's a good possibility. And of course, Twilio is, which we're in as well. Focus list. I'm not going to have a focus list this to start the week outside of leveraged ETFs that we could potentially short. Now, if there's a strong market reversal, we'll flip it, and then I'll go back to the focus list basically we've been watching. But other than that, we don't want to be long right now because we do expect a pullback. But if we always have a plan B. If there is a reversal, then we definitely will go back to our old focus lists, or even the easy way would be just flip it and take the take something like SPY or the Qs, TQQ to the long side. So that's the plan to start the week. Obviously, we can change during the week, and remember, we're starting up the boot camp tonight.